And then, as you know, 13th, I believe it was Thursday. So that's when the CPI came out and the market just tanked. So, all right. So, what I did on that day, because the CPI came out the day before, right? And we had the same kind of sell off, like gap down, just emotional gap down sell off based on the numbers and inflation increasing. And last month, the same exact thing happened on both days. The PPI, the CPI, and the PPI. Whatever, which one comes out for? I think the CPI comes out first, right? The Consumer Price Index, and then we have the producer price or whatever. But either way, both days, off of both numbers, we had a huge gap down. Also, this happened last month. Same exact thing. So, me knowing that we gapped down the day before off the numbers, and we also gapped down the prior month off the numbers, I went ahead and grabbed a small position to the downside based on the numbers being negative. And just like I just like I suspected, those numbers came out and we tanked. So that's this right here. So I'm already good. I'm decent. I'm up for the day. Now, what you would think is that being that the numbers are bad and inflation is up, meaning the Fed can continue with their monetary policy and tightening, that we would sell off, but we didn't. And as you can see, like we found the base here and then bounced up to this level right here, same level that we gapped down to, and then tried to find the bottom here, tried to do something, tried to bounce but couldn't. Then when the next candle opened, temporary support became resistance, came up here, rejected, and then we kind of just barcoded, traded sideways until market open, right? Right off of market open, strength came in, buyers came in, bounced it back up, ran it up past the 9, past the 10, crossing over VWAP to this same level. And that's why these levels are important. You know, obviously, your stronger levels are going to come off the daily chart. When you have a move like this, look at that. That's a huge move. That's a lot of volume. And we came down here and bounced. So, yeah, your best levels are going to come off the daily chart, right? But also, big thing that factors in to the strength of a level is the volume traded. So this is a lot of volume, right? And we bounced off of that, then rejected. So you know this level is probably a significant level. And looking back on it, you could see that. Look, barcoded, traded sideways, off the open, some volume came in, bounced up, crossed the 9 to 10 VWAP, rejected off this level, sold off. Based back down here again at the bottom of the range where we traded sideways and chopped around. Again, wick on the bottom, consolidation, but higher low, higher low. And then this big bullish thing right here, breaking above the 9 to 10 VWAP. Then the next candle opened in a bullish pattern, continuing the trend to the upside. Once we broke above this level, right? Once we broke above this level, now instead of resistance, this level is acting as support again. So now we're consolidating and trading sideways on this level. That was resistance, was support, turned into resistance, was resistance, now turned into support. And I'm pretty sure you guys know by now that support and resistance are interchangeable. I know I've said it on my videos 1,000 times. And I mean, you could see it right here. You know, don't take my word for it. Look at the charts. But again, acting as support, trying to bounce up. Look, notice where we rejected off of that 120. So that's why I use that 120. The 120 is basically a long-term, I use it as my long-term directional indicator. That's the simple moving average, but 120-day simple moving average. That's what I use as my long-term directional moving average. And the blue one is a 10-day. I use that as my short term. And obviously VWAP is VWAP. I'm sure we all know what VWAP is. Basically telling you if the underlying stock or whatever you're trading, the underlying stock, or, if you're trading an index, the underlying is bullish or bearish. In short, if it's under VWAP, it's bearish. If it's over VWAP, it's bullish. I mean, it's a little more complicated than that, but for the most part, that's what I use VWAP for, and also as a intraday short-term support and or resistance. Notice we rejected off the 120, came back down to this level, tried to break down, never really broke down. You've seen some wicks down here, but they're buying it back up. Notice it's bouncing off the 9 and the 10, bouncing off the 9 and the 10 while consolidating on this level. So now it's looking like it's trying to consolidate and try to break out into an uptrend right around here. And again, this level right here, I don't remember where I got it from. More than likely I got it off the daily chart. When you zoom out, I probably got it off the daily chart, or I could have just put it there as a temporary intraday level to show me where we are rejecting and or consolidating within a range at. Again, I'd have to go back and look, but as you see, rejected off that level, came back down to VWAP, bounced back up over this level again. So we're bouncing off of VWAP. We're breaking through the resistance now. So now this level becomes support again. At the same time, we're crossing over the 9 EMA, also the 120-day long-term directional SMA, and the short-term. So now we're looking kind of bullish, but I'm not really sold yet because, again, I'm still bearish, but it doesn't really matter what I think. I have to trade with the trend. So as you can see, we basically consolidated within this range here, but we never broke down this level here. So that let me know. And keep in mind, we're also still above VWAP. We're above the 120 at this point. I'm not even talking about up here yet, just right here. We're holding this level above VWAP, above the 120, and we're maintaining this level. We're not breaking down. It's acting as support. So again, levels are important, and this level is significant, as you can see.